A very good morning, ladies and gentlemen. See you on this very demanding morning for our technical analysis class. I hope you guys had a very, very wonderful weekend. Hope you guys made money in the course of the weekend. And yeah, welcome aboard. Today, we are going to continue from our previous class. We're going to have a continuation of our class. So by the end of this week, we should be in position to maybe conclude if all goes well. If I don't miss out in any of the classes, this 5 days should be sufficient enough for us to wind up with what I prepared for you guys with regards to the technical analysis class. I hope my audio is clear. Please let me confirm if I'm audible enough before we can get started. Confirm if I'm very audible so that we can get started. Am I audible enough? Through the chat, please, could you confirm to me that I'm actually very audible and clear so that we can get started right away? Yeah, so if I'm good, then I think we can move on. Okay, so I was trying to share something here to get some more people on board. So let me. Should be able to start in the next 1 minute. Should be able to start in the next 1 minute. Okay, so let's dive in. Let's dive in into our class for today. Okay. Yeah. Welcome. I'm seeing lots of people from different parts of the world. That is the fire. That's how the crypto ambassador rocks. So you get us live from any part of the world. Yeah, I'm glad to see a friend there from okay, so today we are going to look at something possibly new. We having built a foundation on price action, basing entirely on the trend lines. I believe by now you should be in position to at least effectively draw your support and resistance in whichever direction of the market you would wish to do so. And I also strongly believe by now we should be in position to identify trade entry opportunities in the market just based on price action without incorporating in any other supportive tool. You should be in position to equally establish your different margin call drops based on whatever you saw on the chart during your analysis. And you should be in position also to know how to take profit based on the different price reaction levels on the chart. So that aside, today I want us to see how we can incorporate or add in some other support tool onto the trend line so that we could see if it could help improve the quality of our trades. Remember, when you're going to be doing analysis, much as we have different schools of traders who may, based on particular kind of support tool, to identify for trade entry opportunities and maybe trade, my recommendation would be that try always as much as possible to have an aspect of about 3 support tools to help you aid your trading skill. Try to incorporate some 3. And we're going to have a lot of support tools that we're going to learn about, but it's up to you to choose which one you feel may be convenient for you to use, right? Irrespective of which one you choose, you should know that as long as you perfect your skill in them, you get used to them, and then you make them become part of you, it will always bring out the best of your analysis. You should stop the idea of jumping in from one strategy to another or one support tool to another. Try to pick that which you feel among the different list, on which one you feel would help you improve the quality of your trades. So ladies and gentlemen, today we are going to add in what we call the indicators, the trade indicators. Now, trade indicators are, I would call them a support tool to price action. Remember, when you're doing price action, you're trying to analyze the market in real time. Now, when you add in these indicators, they're sort of like ingredients that helps in increasing the level of confidence in whatever you would have done, in real time. Now, these indicators or these trade indicators are of different categories. They are grouped into different categories depending on what they help you do in the financial markets. These indicators um, we have. So let's look at the categories of these trade indicators. We have the first category, which we normally refer to as we have the momentum indicators. So we have momentum indicators. Now, basically what the momentum indicators help traders do is that it helps you measure the speed or strength of price movement in any financial markets. Right. And when you talk about any financial market, it is regardless of which financial markets you deal in. It can be in crypto, which crypto can be either in the futures market or in the sports market. You can also be trading Forex. The same indicator applies when you intend to use them. Talk about the stocks market, the indices, the commodities, any financial markets that you would wish to deal in and trade in. When you're using the momentum indicators, what you should know is that it is going to help you measure the speed and strength of price movements. Okay. Now, the beauty about these indicators is that they help you identify two scenarios in the market. The first scenario being what we call an overbought conditions, and it also helps you identify an oversold conditions in the market. And the most important thing is that it will, at the end of it all, help you identify potential price reversal areas. Okay, so those are the three key aspects of these momentum indicators. So when you choose to pick them, use them in your analysis, these are the areas that you would be focused on to identify your trade entry opportunities or to make decisions. So if you're able to identify trend reversal or price reversal areas, then I think that's the most amazing thing, because it will help you not to just trend blindly. Yeah. So those are the the momentum indicators. And just a few examples of them would be the relative strength index, like the stochastic RSI, the MACD. So the MACD is more of like a universal indicator. It's a multi-purpose indicator, but we shall look at that in details when we get to that. So the first category is the momentum indicator. The second category of an indicator, okay, is what we would call the volatility indicator. That is the second category. It's called the vola. All right, sorry about that, guys. I think some call interrupted my network. I hope I'm back and audible. Please come. Hope I'm back and audible. I got some call which interrupted the network. So let me confirm on the chat if I am audible. Okay, that's good. All right, then let's proceed. Let's proceed then. Sorry about that. All right. So I was saying the second category of indicator is what we call the volatility indicators. Now, what the volatility indicators help a trader do is, one, it helps you measure the strength. No, I mean price fluctuations. So it helps you measure price fluctuations in the market. And the most important one is that it will also help you identify some of the potential breakouts in the market, those potential breakout opportunities that may present themselves in the market. Okay, so because when you look at them, when you base on the volatility indicators, especially for those specific examples that we're going to look at, is that by you incorporating them in the chart, trust me, you are able to tell at what position is the price most likely going to reverse. And if at all there is also an aspect of a potential breakout, you are able to tell using the volatility indicator. So in simple terms, it will help you just measure the fluctuation prices, okay, market prices, and those potential breakout opportunities. The third category of indicators is what we call the volume indicators. So we have those specific indicators that help you analyze the strength of price movement by specifically measuring the relative amount of trading activity. Okay, can be in 24 hours or any time frame that you would have selected for yourself. So when you incorporate them, they're able to tell you how much volume, okay, how much trading volume of that particular asset has been traded in the last, within the time frame, or within a specific time frame that you would have selected. So it will record for you what the volume was in the previous time frame. So if you choose like a 1 hour time frame and then you add it there, whatever information you're going to get would be on the volume of that particular digital assets in the different 1 hour time frame that has passed. Okay, so if you choose 21 day, then it will give you in terms of 24 hours. And I believe you're so much familiar with this terminology of a 24-hour volume. So it will help you see, okay, how the volume has been fluctuating. And trust me, by monitoring the volume or the trading volume of the digital assets you intend to invest in or trade, it will in one way or another help you make decisions, because most of the times when the volume is low and then you see a progressive increase in the volume of that particular
All right. As we wait for Coach Musa to come in, I think it is network issues. He has been discussing or introducing indicators and trying to paint a clear picture of the categories of indicators that are available to help us make informed decisions. So he has talked about so far momentum indicators, so momentum indicators. Then he has talked about volatility indicators that determine volatility in the market, and trend indicators, indicators that help you know the trend of the market. So I usually do not want to intervene in the training. So as we wait for him to come in, I'll be sharing my trading view, and we find some good opportunities that we could make some money, as I'm also looking for him this side. You know, I love multitasking. As we look for him this side, I also believe it would be very important for us to see if we could have some I know I will be coming in at a later stage of the market, or I will be coming in at a certain period of our trading, and I'll be introducing different indicators to you. But I know also that my Coach Musa, Coach Musa, if you are back, let me know. I usually do not want to intervene with a lot of stuff, but at my right moment, I will be back. Coach Mupiwa, I will inform me if he's back, so that I will surrender what I'm trying to do here, because it's nothing much. Okay. I think I should pick up one or two if he's not able to return, and then be able to share, although my topics would not start from here. Okay. So in all our previous trainings, I'll just do a recap. Coach Mopua, can you hear me? Inform me if Coach Musa gets in. Coach Mopua, can you hear me? Coach Mopua, can you hear me?
Yes, I can hear you, sir. I'll inform you immediately when he comes in.
Perfect. Okay. I'm not going to continue with the indicators. I'm just going to flop in with an indicator, but I'm going to use it in a different way. I'm just going to flop back to support and resistance, and then I'm going to use an indicator that I'm going to share with you that would help you a lot when it comes to support and resistance. Remember, when we are doing our technical analysis, me personally, I love what we call a top to down approach. Top to down approach. That I look at the market from a bigger picture and then analyze the market in a small picture. Okay, let me explain what I mean big picture and small picture. This is basically time frame. I've had many people ask themselves, what is the best time frame for my analysis? Where should I find a good time frame for my analysis? Now, let me just pick any coin of my choice. So let me pick Solana as a learning example, and I will introduce an indicator for you. So I think it's that. Okay. Now, let me start with 1 day. And I just want you to basically just understand what I'm going to talk about so that you don't get confused. Now, what is 1 day? What you see in the chart, basically, ladies and gentlemen, these are what we call candlesticks. The red that represents sellers and the green that represents buyers. Since we are in the 1 day time frame, ladies and gentlemen, it means that each candle that is seated here takes 1 day to be complete. It means that each candle here, this one, has taken 24 hours to be where it is. Okay? Since it takes 24 hours to be where it is, if I come here on my tools, these are drawing tools, which I remember well discussed. These are drawing tools. They help you draw different tools, and I'll take the horizontal line. So when I take maybe the horizontal line, or let me use the horizontal ray, and I drag this dotted point to this lowest point or the wick there, and I also bring the horizontal ray, you just drag the dotted part to where you want it to start. Then you tap in the dot. So that is the lowest point. This is the lowest point, and this is the highest point. In short, this could be the support, and this could be resistance. Okay, on one single candle. So let me identify this candle by drawing a vertical line on it. I just bring a vertical line, bring my dot, tap in the dot. So I have identified that candle. Okay. Now, when I go to 4 hours, it means that for the day to be complete, ladies and gentlemen, for the day to be complete, it started from here and it ended here. Meaning that this is the full day. That is the full day. Having a good number of candles, and each candle here takes 4 hours. So you see 1, 2, 3, 4, 5, 6. 6 candles. And each taking 4 hours. Meaning that if I was trading in one day, I only had 1 candle. But when I come to 4 hours, I have 6 candles, meaning this is a small picture and this is a big picture. When I continue to 1 hour, you see this is 1 hour. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. So here I have 24 candles. And these 24 candles, each candle takes 1 hour. But in one day, I have 1 candle. Meaning that even though I have the bigger picture of one day, if I want to trade this coin, the more I go to the lower time frame, the more opportunities I find. Meaning that if I was trading this coin in 1 hour, I would have made my first entry here and took a 4%. Then when it made a retracement, I made my other second entry here and took another 2%, which would be a total of 6%. So the more I lower the time frame, the more opportunities I can get, because the other one is a bigger picture and this one is a smaller picture. In short, when I analyze the market in a bigger time frame, I must look for an opportunity in a smaller time frame to make what we call an earlier entry in the market. Does that make sense? So when I analyze the market, let me say in 4-hour time frame, if I want to get out of the trade faster and make an earlier entry in the market, maybe I will go and look at the market in 1 hour. Or if I analyze the market in 1 hour, or I will go in 4 hours, then I might go and look at the market in 30 minutes. When I analyze the market in 1 hour, then I will go and look at the market in 15 minutes. What am I finding for? Because this is a small picture and this is a big picture. In short, if I go to 1 minute, I'll find 1 candle in 1 minute. But when I go to 5 minutes, I'm supposed to find 5 candles, each of 1 minute, 5 of them, but I'll find 1 single candle, meaning this is a bigger picture of the market. This is a smaller picture of the market. If you have understood time frame, type for me a 1 in the chart. If you have understood time frame, type for me a 1 in the chart. And so you have a personal choice to choose a time frame that resonates with your personality. Now, I want to introduce an indicator to you that will always bring a 1-day time frame candle to every time frame you are trading in. Let me first remove my lines. For example, this is 30 minutes. It's a smart money indicator tool. This is 30 minutes. I want to make sure that whenever I'm trading, the 1-day candle appears here in my chart. Does that make sense? Let me say this is the coin. I love Wafi Hot Dog. It was a coin I bought. I remember very well. And I bought an iPhone from this coin. I will never forget. So I love it. I don't know whether it will repeat to do what it did in the past, because this coin went up to $3 and it changed my life. I decided to buy an iPhone for my wife from this coin. I will forever be grateful to Waffy Hat Dog. I don't know whether it will repeat what it did for me, but guys, this coin changed my life. I bought an iPhone 15. I remember that time from Wappy Hat Dog. Okay, so let me say I am trading in 1 hour. So I introduce this indicator. It will always bring the 1-day candle chart. The 1-day candle chart on my chart. Does that make sense? I don't know if it does. But now I'm going to give you the name of the indicator, all right? So I will remove it first. The name confuses me, but when I go to my indicators here, I'll remember it. Then I'm going to read it to you. Just give me, let me see whether it is this, the HT power of 3. Just I'm going to give you the name. Good. So it's the one. So when you want to introduce this indicator, go here on indicators, then come on technical. The name of the indicator is the HTF power of 3. Okay? The HTF power of 3 is the name of the indicator, and it will always bring the 1-day candle to every time frame you are trading in. Okay, so when I tap on it, even if I go to 30 minutes, the 1-day candle and its time that so far it is remaining 18 hours 36 seconds to get done. Okay, let me say this is 15 minutes. It will always appear. And I know many people are asking themselves, why would this be very key and important to me? Remember, let me take you back to what I did recently. For example, I may not take the current, but this is the current. This is the current candle. For example, if I draw a line, let me use the horizontal ray to this lowest point, and I draw the line. This is still moving, by the way, to this highest price. When I'm trading, and this kind of mine appears in a 30 minutes time frame, okay, it will always give me a better impression of what is happening in the big picture versus what is happening in the small picture. I don't know if what I'm saying makes sense. Let me know in the chat. So the name of the indicator, just to repeat for you to add any tool in your chart. If you're using a phone like me, tap on these 3 dots. Sorry, those things there, I don't know them. Then come on indicators. Then come on technical. So the name of the indicator is called the HTF power of 3. And it will always move the 1-day candle to every time frame. So if I want to analyze the market, I may not need it to go back to the 1-day. For example, like other indicators are going to be introduced to you. If the momentum indicator is directing good momentum in the market, like the RSI, is directing that the momentum of the indicator is very solid. You see, I don't suffer. I just draw my horizontal line to this highest price. Okay. And if I'm going to enter this coin, I will measure from here to the previous high of this 1-day candle. I'm just giving you an example. And I will go and take a 1.3. I'm using the bigger picture to help me find what is happening in the small picture using the big picture. For example, the other thing, if the market is on an uptrend in a bigger time frame, an uptrend meaning the market is going up. In most cases, there are higher chances for coins to deliver in a lower time frame. So if the market is generally on a downtrend, my chances of winning this coin are very low. So that's why this 1 day or the HT power of 3 to me is a very, very important indicator in giving me a bigger picture without me going back to a bigger time frame. So if I'm a trader of one hour, if I'm a trader of 15 minutes, I will always on my chart have what is happening in 1 day to give me a better perspective of the market. Does that make sense? Let me know. You see, today I intervened, but I'm not supposed to intervene. No, I'm not supposed to intervene in these classes now. I'm not supposed to intervene. So, Coach Musa, you didn't come back. Hey. Coach Musa, you did not come back, my brother. What happened? Let me run away from sharing. Also, you agreed with the Coach Mopiwa, he also kept quiet. Yet we agreed when you come back, he tells me, so he has been silent. Okay. Back to you, Coach Musa. So, Coach Mopiwa kept quiet.
He has just arrived. He has just arrived. Ask him.
Okay. I actually arrived a long time. Okay, but it's fine. It's fine. I arrived even before you started sharing about the HTF indicator. But it's fine, okay. But that was a good one also. I think it was a good insight. Yeah. Yeah. Okay. All right. Sorry about that. That was an interruption through a call, so I had to temporarily put that specific line off for us not to be interrupted again. Okay, so thank you so much, Leader Julius. I think that was something as well. At least it's that's the beauty of being such a class. You get attacked by knowledge or with knowledge. Anytime you can be attacked, and you find before you know it, you have learned something. So that's the beauty of being in a call like this. Yeah, learning is endless and so fruitful to whoever do not miss these classes. Yeah. Yeah, so as of course we say always in our calls, is that we have tried so much to enrich you with all it takes for you to be a successful trader. There's just too much of knowledge that have been shared here, and if you haven't grasped anything or you still find difficulties in grasping something, then I don't know, maybe this business will not be for you. But I wonder which financial market would go to without wanting to learn. You will not go to any financial markets and then you say things are going to happen magically. Never, 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 never. You will have to always sacrifice and do something. Yeah? You go out of your comfort zone. I know most people say, hi, you can do trading as a side hustle. Yeah, you can do it along your work. My friend, trading is a real work. It's a real job. It's not a side hustle. Eh? You take it as a side hustle and you see. Give it all. Give it really in what you can so that with the time you shift your working environment from that one which keeps you running up and down and being harassed here and there going to be a subordinate bowing down to to the bosses and being a yes man or a yes woman to something where you can be independent, you can be so independent and then you become a boss of yourself. If you want to harass yourself for not learning or for failing to understand something. Harass yourself. Eh? If you can slap yourself. Yeah, because you fail uh, to understand something. Yeah. So that would be the best work. If you don't wake up early to see what is happening in the market, when you wake up, you should punish yourself for waking up late. Okay, so let's come back. Let's come back to our class. I know we're gonna may our time was not interrupted at all because we had something to learn at least. Okay, so we're talking about indicators, and fortunately enough, what Leader Julius chipped in and shared is equally part of the indicators. Just a minute. I'm gonna clear my charts to give room for what we're going on today. So, okay. Let's come here. So we were talking about the different categories of indicators, and I think we well looked at three. Is it three? Do I remember? Did we look at three? Did we look at three or two? Let me see if we are following. How many did we talk about? We talked about did we talk about momentum indicators? We talked about which other? Did we talk about volume? Did we talk about volatility? Right? Did we talk about that? We talked about three. Someone is saying two. Please, you punish yourself for not following. Okay, so let's look at, I would call it the last category. The last category would be the trend indicators. Yeah, the trend indicators. But this is the common one we tend to share most about, the trend indicators. Now, basically what the trend indicators do is that it helps a trader identify the direction and strength of a market trend. Okay, you are able to, it helps in showing you the direction in which the market price is actually taking. And some of them actually show you this direction in real time, and some of them gives you a signal of what is actually possibly about to happen. Okay, so those indicators are there, and we're going to look at a few of them. Now, out of all these indicators, I believe when you see on a trading view, a number of indicators are all out there. I should go to the technical section, yeah? But we cannot exhaust all of them. Okay? You cannot exhaust, like for me, I have just specific indicators I use. All right? There are specific categories, but you have so many, so many. Indicators are so many. Those ones that are based on patterns, those are based on candlesticks, those are based on a lot of indicators, but we cannot exhaust them all. That's why sometimes we pick a few and would wish you to actually try to understand them deeper because they are the most commonly used indicator and they're user friendly. Okay, that's why we tend to concentrate on them. So whichever indicator you choose, it's just a matter of perfecting yourself in them. Now today we're going to look at one indicator which I would I would request you to permit me share more about it. It's a common indicator. I love this indicator. If there is an indicator I love, if this one of these, if they are among the indicators that I love this most. I have 4 indicators, 4 to 5 indicators that I really love so much because they really help me so much understand what's happening in the market. So I love sharing more about them as well. Now there are specific indicators that are also good. But just as I said, it is a matter of exploring. You can go ahead and explore them more, and then you choose. You never know, it may be one that may work for you. Yeah. So we're going to look at an indicator called the Stochastic RSI, Stochastic Relative Strength Index indicator, and this indicator is a trend indicator. And let me go to the chart, and here it is. And I add it on the chart. This is the indicator. This is how it appears when you add it on the chart. Okay, this is how it appears. It is actually a trend indicator. It shows you, 1, the direction of the market, and 2, it shows you the situation of the market with regards to that specific digital assets you're analyzing. It will tell you whether the price of that coin, or the coin is within the oversold region or when it is in the overbought region. And by doing that, it gives you insights on specific areas of making entry. So this indicator has moving averages, or what we call these lines that move along one another. Okay, they are sorry. Okay, all right, so let me move it a little higher so that okay, yeah. All right, so this indicator has these moving averages. These moving averages are, for to us, we have the K line and then the D line. Okay, so these 2 moving averages help you. Let me just tap on it. All right, so the K line is this other line, which in the default settings appears to be blue, and then the D line is the one that is red. The K line is actually the line that helps you make decisions. Okay, it is the one that it helps you make the decisions while trading. It also has 2 lines that run horizontally. There's one we call the upper band, the lower band, and the middle band. Okay, now these 2 moving averages or lines run within a range of 100%. Okay, it runs within a range of 100%. Now, at what price level or at what percentage you would wish the upper line and the lower line to be demarcated to help you identify as to whether the market price is within the oversold or overbought is entirely dependent on you. Okay, it is dependent on you. Though the most common one that people tend to use is making sure that the area that is above the upper zone ranges from 20, okay, to 100. And then the areas that are below the lower band ranges from, 80, not sorry, it is 80 to 100. Then this one is 20 to 0, right? So there's a tendency of leaving that area, that 20% difference, because those are the areas that will help you, locate the demand and supply zone. Okay, so that is what is on the chart. So now this indicator basically demarcates or locates these two areas, the ones that are below the 20%, and then that one which is above the 80%. So this area, okay, and then this area. The areas below the 20% is what we call the oversold area or region. In some other cases, some traders call this area as the demand zone. It is an area where most traders will be looking at to make entry or to buy. Okay, right? It's the most area that people tend to look out to make actually decisions to buy. Then we have this area above, which we call the overbought area or region. It is also called the supply zone. All right. So meaning literally that when you see these moving averages within the supply zone, it actually indicates that the coin has been overbought, right? It is already so much limited in supply from the market. So people would wish to actually begin taking profit. Okay. So once it is within the oversold region, that means the price has dropped significantly, right? The supply of that coin is so much in the market. It has flooded the market to an extent where the price had to completely drop. Okay, and that would be the best time to buy them, when they are so cheap. So this indicator indicates those two areas. Now, amidst the movement of these two lines, the K and the D line, what brings out the real event that will determine your decision making is what we'd call a crossover between these two lines. All right, a crossover that, irrespective of the direction in which the price will be taking, as long as these two moving averages are moving before the actual direction is indicated, there must be a crossover. What we call a crossover. A crossover where the K line will cross over the D line, and then a crossover where the D line will cross over the K line. In other words, when the K line is moving, when the crossover happens where the K line crosses over the D line, let me even not go there first. How do you tell that the trend is going to change or is shifting to an uptrend? An uptrend is indicated when a K line crosses and begins running above the D line. Remember, the D line is the red line, and then the K line is the blue line, as we saw here, Okay, so in a scenario where the blue line crosses above the red line, it is an indication of a market structure shift to the uptrend, okay, or to the upside. So it indicates that the trend is going to change and we shall begin seeing a movement towards an uptrend. When we see the the K line crosses below the the D line, meaning the blue line crosses below and begins running below the red line or the D line, it is an indication of a downtrend market structure. Now, what you must know also here when you're using this indicator is that depending on the time frame you're going to use, sometimes the movement of these indicators towards the oversold region does not necessarily indicate a trend reversal to the downside. Sometimes it indicates a retracement intended to gather more momentum to maintain the previous price movement. Okay, so it does not necessarily means that the trend has already reversed to the downside, but the beauty is at least it shows a drop in the market price. So whether it is a reversal or a direct shift towards the down trend, it is not so much important. The most important thing there is the crossover is what brings out the real event. Now, when you're going to use this, where would be the best place for you to make entry from? The best place to make entry from is when on the indicator you find out that a crossover has happened, what we would refer to as a golden crossover. When the K line crosses over and begin running above the red line or the D line, it is a very good opportunity to make entry in the market in areas like this, okay? Like this, where you really see the blue line has crossed over the red line, okay? In areas like this. Now, normally, when this crossover happens around here, from the 50% downwards, it actually presents the best time to make entry for a longer take profit. If sometimes, depending on how the market is, the crossover happens even here in areas above the 50% or even within the overbought region. But it does not last long. And it is a scenario, this is a scenario where you find when the market is really pumping hard. That means people are pushing and pushing and pumping the market so hard. You'd find that there comes a scenario where the crossover will even happen within the overbought region. Now, those are the scenarios where we get trapped, especially if the market is pumping so hard. If the crossover is happening above there, yes, we can enter and take some profits, but along the way, there's a likelihood that when this crossover happens, okay, and then you see this kind of movement, it's a scenario where we may find ourselves floating in a loss. Okay, now, what you should be praying for in that instance would be that should be just a retracement, so that as the market price moves in this manner, it is just a retracement to gather momentum to have another movement. But if it is, should it be a reversal, then you will have to wait for some time before the price can again come back in your favor. All right, so let's come back here. Let's come back on and try to see what happens here. Oh, why is this? It's a minute. Let me see. Okay. Okay. So when you come to the chart, I want us to just try to monitor through what happens most of the times when this crossover happens, when the golden crossover happens. We're going to begin with this area. Okay. If you can see critically that when a crossover happened here, around here, on the stochastic RSI, it was actually after this kind of movement, after a very long movement to the downtrend or to the downside, as we see there. So after the market price being supported around this region, we saw a shift in market structure to the upside. And that only happened when a crossover happened here. So meaning, had we come across a scenario like this when the crossover is just about to happen, right? Remember, this indicator is going to support your analysis. You're going to support your price action. Before you can come or add this on the chart, you needed to have, first of all, identified or located your different price reaction level on the chart. And then you should also find when you have drawn your support and resistance so that it really makes more meaning to whatever this is going to tell you. Meaning in actual sense, before you add this, first make sure you locate and draw your trend lines. Okay? So in this case, it means that if we were to draw our trend line, this is an area we're going to capture. Okay? We will capture this area here. Right? This will be the key area that we will capture as a support area. At the same time, we would look at this area as well. This is another area we would capture. See that? This will be another area that we would capture. Okay? Those will be the key support areas. Then we'll come to the key resistance areas would be this. Okay? Would be this area. Those would be the key resistance area, right? Now, for us, after doing those demarcations, what is left to us is, we said when you're doing this drawing and we want to make this analysis, you have to pick out your area of concentration, the areas you're gonna base on to make analysis. You don't have to look at the entire chart. Just demarcate those areas with relative to your market price, okay? And then you see how the market will fare or react to those different price levels. So what will help you to give you confidence on as to whether to jump into the market or first wait, okay, or use a preset will actually now be later when you add on this indicator to find out at what position the market price is, okay, with regards to either being an oversold or overbought region, right? Because you will be looking out for those opportunities where there's a crossover, especially the golden crossovers. So if you draw your line like this, you realize that this is where the crossover happened, right? Let's use current price. This is where the crossover happened. The crossover just happened here. This is where the crossover happened. Look at this here, right? It first happened here. It happened here. Okay, there, right? The crossover first happened there. And then we also saw another crossover happening here. Here. This is where night real happened before the market price picked up. There. Now, from the look of things, I would base on that one, that the crossover has happened here. The crossover has happened here. And the beautiful thing is that it has happened within the demand zone or the oversold region. So that means you entering when the market price is, when the price is within, when the coin is within the oversold, is more important for you to take a bigger profit, because now, based on your trend line that you have drawn, you realize that the price is just midway to your key resistance area or zone. So entering at current price, you still have much to take from the market. And remember, by the fact that the two lines are already pointing upwards, a golden crossover has happened, and the two lines are already pointing upwards, and the K line is already running above the D line. That means you have a long way to go from here. By the time the market price reaches the overbought region, that would be when the price has actually broken this area to the next resistance zone. But you will not assume that it is going to break, right? What is most important here, you're just preparing your mind for what is going to happen. So take this measurement. Okay, let me just use this. See this. Let me just capture that area. Okay. Let me capture this as well. Let me use a trend line. Okay. have those key areas. You will not take them for granted. Then you capture the other one. Okay. So meaning, basing on your current price, if you wanted to make entry at current price, measure this from here. You have this up to about this percentage. Now, it may happen immediately or it may happen gradually, right? This is 4 hours time frame. But what is going to give you more confidence to stay in this trade is this event that has happened. Right? It is too early. It is still very early. So you will wait, you'll make entry here or at current price, and then you look at this as your first TP target, right? You look at that as your first TP target, and then this area will be the support area. So if you wanted to establish margin call drops, you look at those areas. But the most important thing when you're going to do that, if you want to establish and identify those different trade entry opportunities, you go to a lower time frame. Yes, you know you will have about up to 14%, all right? Which from the next trading session, it can be possible that you hit it, or it can even be from the very same time frame, right? I mean, this very same trading session, depending on what is going to happen in the course of the trading session. Sometimes the momentum builds up, and then that very same one candle represented within that by that time, particular time frame actually achieves the percentage of measure. But you don't want to assume. So you go out to a lower time frame, like 15 minutes. Now that you should expect that, yes, that would be something that would happen. However, expect some moments of a pullback and an expansion. So you doing that would literally mean you'll have to identify some of those mini support points in the market. Identify those mini support points in the market, just to make sure that you don't take chances. Have those mini. All right, last 15 minutes, remember? 15 minutes. Take measurement. This is the most recent swing high. So you can take profits in bit. So there's a curve happening. In the 1 hour time frame, a crossover has happened and the trend is on it is rising, right? It is on the market is on an uptrend. But when you come to a lower time frame, like 15 minutes, it is telling you that there were some moments of a downtrend movement, which is an attempt of this retracement, right? There was a break of structure to the upside here. Then now it is pulling back. So it pulled back to this area, and based on what we're seeing, the bullish candle, we are building up for the next movement. And here we are seeing a bend, okay? A bend towards the D line, which is telling you a possibility of a crossover happening. But we know in the bigger time frame, we are going to go bullish, right? So here you would enter at current price. If you make decisions to enter at current price, you'll have this percentage to take. This is the first TP of the 12%. That is the first. Then use this just for in case. Measure this to your first support you have identified. For your margin call drop, measure that. Pick this again. Measure this for your margin call drop. Just in case you have your areas that you're going to measure and set as your margin call drops for the different price levels, in case the price does not really rise as you intended or as it was intended in your analysis. That's how you'd go about that. But we know we have a longer way to go. 4 hours is telling us that the market is actually doing good, or it's going to do well, right? But there are some mini movements that we have to capture, that we could take advantage of and make some profit, all right? Those moments of retracement in the course of the build-up, other than taking the 12%. But if you're busy, don't mind about the mini movement. If that is the case that you have identified, that there's a possibility of a 12% TP, relax, set it, and then you go and do other things. Establish your margin call drops based on the smaller time frame and wait for your 12% to be achieved. Okay? Just measure those percentages. Set your margin call drops so that in case something happens as you are aware, you know you're not left out. You have something to, your robot will be at work. This will be the fourth margin call drop. Okay? Don't take chances. That's how you go about establishing. Like that, until you have that. But of course, you cannot just open blindly, right? Sometimes it is important to open at a time. All right, you can first open the first two, and then you wait. Once it buys the first two, then again you go and open the other, and next, like that. That is if you have time. But if you don't have time, measure your margin call drops at once and set them accordingly. So whatever level that the price will drop to and then reverses in your favor and begins rising, you'll be taken care of by the different margin call drops that the robot will be buying. Okay? Yeah, so that's basically how you use this. Now, always avoid making entry when the stochastic RSI is indicating that the coin has been overbought. Avoid, don't enter from up. Wait for crossovers or when crossovers are about to happen. Okay? That is when you should make entry. At least where the blue line is intending to cross over the red line. The red line. That is the best time to enter. Okay? Yeah, so that is very important. I hope there is sense in that. Yeah, those are just hints. I believe you can go and expound. You can expound on your knowledge on that in details, but that is briefly how you use that indicator. First, you do your price action, draw your trend lines. Then you now later add on the stochastic RSI just to have a picture of what the market is like. All right. And then you decide on making entry decisions by going to a lower time frame and also identify those mini price reaction level to establish your margin call drops, and you'll be good. So from then you can decide to either enter current price or look for the most recent support level to establish your preset, and you'll be good. As simple as that. As simple as that. Okay. That said, I think we are good. We're good. Yeah, so little Julius, now back to you to wind up. I think I'm done for today with Stochastic.
Wow, beautiful. Could we give some love heart, some thumbs up to work well done by Coach Musa? Actually, I do not have much to say because the learning is in the doing. The learning is in the doing. If you don't do, it's like pouring water on a stone. Okay, so the learning is in the doing. The learning is in the practice. The learning is in the practice. The learning is in the practice. So the learning is in the doing. If you don't do, it's like pouring water on a stone. So I have nothing to add from that. See you on the next call. How to work out on your margin configurations in your robots. Thank you so much, Coach Musa. We still have him the whole of this week, guys. Thank everybody, and have a good day. Yeah, but Coach Musa, has he gone? He gave you a coin to trade. I think he has left. That coin was very good. I hope people saw it. You know, people will be here. I'm looking for a coin. He gave you a very good coin to trade. I don't remember the name, but those who paid attention must be knowing. But me, I don't remember. So don't be here. Tell us the name of the coin. You were around. With who? I was around with who? Even me, I was. So the coin is there. If I'm saying what hot dog, it is this one, Arch. So you can trade Arch. Yes, it was a very good coin. You were absent-minded with who? No, some people. I was absent-minded with who? Some people. I was absent-minded with who? I was absent-minded with who? Uh, all right, guys. See you on the next call. I usually encourage people to always keep attending training, because that's where the learning is. So I'm going to I'm going to copy, and I share this signal, because in the 4-hour time frame, it can deliver as long as people can be patient. You know, we have people who are never patient with the trades. Right, see you tomorrow, guys. I hope we bring this to an end. You have been a very good class. See you tomorrow. Yes, see you tomorrow. See you tomorrow. See you tomorrow. Bye, everybody. Today, yes, but I will be me. I'm always around. I already do crypto. Now, I'm always around. So see you on the next call. Yeah. But guys, do you know that the market is very bad? But people are making money. Let me try to check and use. Yes, people are making money. See, people are making money. People are buying robots. People are buying robots. You are busy sleeping. Guys, people are busy buying robots. What are you doing? You are sleeping. People are buying robots every day. So for you don't want to tell anyone. You don't want to tell anyone. Bitcoin is rising because MicroStrategy is buying today. It's okay. Don't tell anyone. Some people think when they tell others about crypto, they are helping us. You are helping who? When you don't tell anyone about your business, you are helping who? For us, we are busy doing what for you fear doing. And we shall continue whether you do it or not. Just a humble reminder. So don't think you are helping us because we are doing it whether you are around or you are not around. Remember, the business even existed before you came. So help yourself and chase yourself out of poverty. Or else, for us, we are having sleepless nights doing what you had to do. So you are not helping us. You are helping yourself. So you either help yourself, get out of poverty, or we do it whether you are around or not. Someone was telling me the other day, I will not tell anyone about Royal Q so that you suffer. I suffer with who? Me, I'm busy telling people every day about Royal Q, whether you do it or not. Eh? So never think otherwise. So whether you do it or not, me, it is the thing I do every single minute of my life. Whenever I can take in oxygen, I must tell anybody about Royal Q. You wait, the day you will wake up when everybody in your family has a robot. It's when you'll understand. It is there on Binance. You wait the day. You wait the day you will understand. You will understand. The coin is not there. Huh? What is the name of this coin? It's not a trade. Was the name of the coin called ARC or Arch? Even ARC can. So even this one is okay. Someone is saying the coin is not visible. Let me look at another one. All right, guys, have a good day.